Check 1, 2.
Go! Curious about real estate? Yes! Then you've come to the right place. Get the knowledge you need. Get over the fear and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with podcast 97. Today we have the 5 questions sent in by investors who had a question and we're trying to answer. And remember, if you have a question, send it to support@bsffacademy.com. Support@bsffacademy.com. Here we go. Question number 1. After you list a house on the MLS for resale, do you encounter difficulties with a buyer's appraisal since the house was recently purchased by you for much less? If so, how do you overcome this challenge? It hasn't been an issue. Not at all. So, and the issue typically doesn't come from the appraiser. It comes from the loan underwriter if the borrower is receiving or getting a mortgage. And sometimes we'll have to wait our seasoning out on that, but it is what it is. And it's part of doing the business as a real estate investor, buying so low. And most of our buyers buy with cash anyway, so it's not a big deal. Question number 2. I've noticed that Alex and Ryan do not spend much time building rapport with sellers, such as engaging in personal interest types of conversation with them. Is this because you found it irrelevant to deal success? They're not paid to be nicey nice and friendly and everything. They're paid to be retrievers of information and negotiators. And when you have someone that wants to sell a house, I think they respect that. They're never going to meet each other. So the small talk that we want to get into is more small talk when we know we're going to go out and meet the person, so we can build rapport and engage some nurturing. But we're not nurturing. So we're buying houses. And if they don't, if someone that calls up and they want to talk about baseball, well, they need to call someone else. Because we're not baseball players, we're real estate investors, and that's what we do. Question number 3. If using private money to buy houses, what professional do you use to set up the paperwork to put the lender as the note holder? Is this an attorney or title company function? It is absolutely a closing attorney or escrow company function. So if you're in an attorney state, your attorney will do that based upon your guidelines and what you offer to them to do that. Keep in mind, you're in control of the terms. Those are the terms that you and the underlying lender, private lender, agreed to. We just send them over our note that we have. They draw up their own, and then the recorded document, and so it's all legal. Money goes to them, then the money comes, then money eventually goes to the seller. Any overpayment, and there's always a little bit of overpayment because they always pad escrow or closings, comes back to the buyer or the purchaser, which is us.
Thanks for listening to Buy, Sell, Fix, Flip. We'll be right back. Are you running out of leads? It's time you tried Yellow Letters at yellowletters.com. Get motivated seller leads through yellow letters, postcards, zip letters, typed professional letters, greeting cards, door hangers, and business cards. Yellow Letters is a full-service marketing company created with your success in mind. Get the personal attention you need to get your direct mail campaign started and get in touch at yellowletters.com.
And we are back in 3, 2, 1.
Question number 4. What is the close ratio you see on your calls? Meaning, how many calls should I take to close one deal? Boy, that's all about you. I've seen 1 in 90. I've seen the average is like 1 in 27. Motivated callers. Now, these are not looky-loos. These are people that say, hey, I have a house, I want to sell it. My personal is like 1 in 9. So, if I talk to 8, 9 people, I'm gonna buy a house. But most people are going to be at 1 in 27. So get the 27 people that want to sell you a house, you'll buy one. Question number 5. I was told by the title company that if buying a home subject to the existing mortgage, you don't want to buy subject to if the current mortgage is an FHA or VA. There is huge liabilities for all those involved when dealing with an FHA and VA mortgage. Do you buy subject to an existing mortgage? All the time. It's going to be more likely an FHA loan or VA loan than any other type of loan. And I just don't see any issue with it. So, again, we're not buying subject to and leaving the subject to note in place when we resell it. So we're extinguishing that on the resale. We're absolutely not jeopardizing the seller and their credit by selling it to somebody else and expecting somebody else to follow through with our promise. And we would never want to do that anyway. I mean, if you do that, then I think shame on you, because just because a buyer says he's going to, or she says she's going to continue to make the mortgage payments on a subject to loan that you bought and then flipped and kept in place, doesn't mean in fact they can or will. And I mean, if you made a promise to a seller that you make sure that those payments are made, well then, instead of selling that sub 2, sell it as a sub 2 wrap. So you're wrapping around the existing mortgage, so you're in control, and then you can honor your commitment. But why do that? I mean, we're buying it 55, 60 cents, 65 cents on the dollar. Why not just extinguish it? Just get rid of it. And that's why we don't do marginal deals. But there's a lot of people that buy marginal sub 2s and have to keep the sub 2 in place. And I just think that's dangerous from the investor's perspective, because you've got to honor your word. And everybody always says, well, there's a due on sale clause on the subject to. There absolutely is. Here's how that works. They give you a 30-day notice that they're going to call or accelerate the due on sale if you don't pay it off. If you don't pay it off, then you go into foreclosure. And in my state, that's 90 and 21 days. So 111 in that 30, so I have 141 days. But I know that if the lender called and accelerated a due on sale, and keep in mind they never have with me, that I'm just going to pay off the mortgage. I mean, I'm buying it at a price point that I can pay it off. It's for sale anyway, so it's probably going to be sold by the time they decide to elect to accelerate or elect to send me that letter of election to accelerate. So I just don't see it as a big deal. I mean, we get our own insurance on the property. We make the mortgage payments in our name. We transfer the title. We're not disguising it by putting it into a trust or anything like that. So we're pretty transparent, I guess. And I just think that's the right way to do it. Great questions. I wish I had some more, but keep asking them. I appreciate it. And keep going up to iTunes. And if you like the little podcasts, tell us that you like them so we can feel proud of ourselves. And remember, my coaching program's coming to an end. The one-on-one Massive Profits coaching program's coming to an end. So if you're even remotely thinking about it, jump on board before it's closed. And also, we have moved the Daily Deal podcasts to our Academy site, and you can get to the Academy site on the Buy Sell Fix Flip site. If you just click on the link that says Daily Deals, it'll take you there. And thanks for writing in, and until next time, bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.